Dan, this quarter looking a little different than when you reported back in November. I guess as Mark Twain would say, the reports of your death have been greatly exaggerated here. What do you think changed during the quarter?
Yeah, well, hi, Leslie. How are you? And I just want to congratulate our former board member, Barry McCarthy. He's a perfect pick for Peloton. So what happened was, look, when we reported in November, we didn't really know where the bottom was. I mean, school year had started, you had COVID continuing, you had students going back to school, you had fewer students going because the economy was strong, you had people taking fewer classes, easier classes, and schoolwork hadn't started, even though it was already November 1st. What happened after we reported was clearly the rhythm of learning restarted, and Chegg had an incredible quarter as a result of it. And what it really proves in our mind is that when you need to learn, when you need to master your subject, when you need help, you come to Chegg. And so our business returned to growth almost immediately. And, you know, in the education space, we're not only growing, we're the only profitable company. We produce free cash flow. We retired $10 million shares of stock last quarter. So we're in an incredibly strong position to reaccelerate our growth, and we're super excited about it.
What's your expectation from here? The job market is still pretty strong, so the trade-offs for a lot of individuals could still be that they want to go experience potentially higher wages in the job market versus pursue, you know, additional opportunities in the ed tech market. Is that something that you think could be a concern moving forward?
Well, we planned for that in our guidance. So what Andy, our CFO, said on the call was we have obviously great visibility into Q1. We have really good visibility into Q2, but we're being very prudent about the second half of the year. The second half of the year assumes no change, which is highly unlikely, but we just thought it was prudent to do so because over time, people will come back into the education space. But I think what's also happening is just sort of a revolution of new pathways of learning. There's traditional pathways, new pathways, community college, boot camps. Chegg is relevant for all of those. Plus our international expansion. You know, we said a year ago that we hope to do 1 million subscribers outside the U.S. We actually did 1.5 million. And so we see growth vectors in lots of different places. And at the same time, because more students are taking our more expensive package, we're seeing increases in ARPU and profitability. So we're in very good shape to be able to take advantage of any accelerated growth.
Dan, it's David. You talk about having visibility into the first and second quarters, but I think many of your investors, that's kind of where they get squeamish and are concerned, perhaps, that you don't have quite as much visibility given what happened that third quarter. So what is giving you the confidence that you can say something like that?
Yeah, no, great question. And we debated that because normally we give guidance in November for the following year. We chose not to do that, even though we gave guidance for 21 when no one else did. So what we saw was a reacceleration of growth in Q4 starting in sort of mid-November. That has continued on, and that has positive ramifications for the whole year. And so when you just look at the internal metrics, what did we see? Record renewal rates. Record reduction of cancellations, our lowest cancels that we've seen. Highest take rate for our $19.95 package versus our $14.95 package. And a continued acceleration of growth. So we didn't expect to see growth in 22 until later in the year, and we're already predicting it in Q1. So we feel comfortable that the momentum we're seeing in Q1 allows us to put out this guidance and feel good about putting out the guidance we put out. And we're just being prudent.